Hey guys, welcome to the channel. It's Hamza, and in today's video, I'm talking about the 2021 impending real estate market crash. That's right. With real estate forbearance forgiveness ending January 1st, as well as the eviction ban hopefully coming to an end January 1st as well, we're gonna see a lot of real estate in the market. So at this point, I bet everybody's thinking that this is when the market is gonna crash and this is when we're gonna jump in. But here's the problem with you guys waiting for the market to actually come down. It's historically proven that time in the market is better than timing the market. Now, this is true for the stock market and for the real estate market. And over the long term, which is what you guys should be investing for, real estate has always appreciated. Now, according to a lot of studies, the Las Vegas market is going to see the heaviest decline in 2021. And based on those studies, the market there is going to go down up to 9%. So for example, if you bought a home in the Las Vegas area for $300,000, you could expect to lose as much as $30,000. Now, in my opinion, waiting for the market to go down and then buying is actually more difficult than you may think. And let me talk about that in a little more detail and give you guys some examples. Right now, the interest rates are at historic lows, which is driving the property market at an all-time high. Residential real estate, due to a combination of low interest rates plus people moving out due to the pandemic into the suburbs, have seen some of the highest purchase points in history. And this means that everybody who can buy a house is buying a house right now. And who's to say that the market will actually drop? Because think about it. In 2019, everybody was saying that we are going to see a huge decline in real estate in 2020. And in 2020, even though we had the pandemic, the market has recovered at a roaring pace. And we're back to all-time highs, both in the stock market and in the real estate market. It seems to me that there's just a lot of cash chasing a lot of deals. And I'm seeing this personally in both my portfolios. Now I can understand, and if your goal is to buy just one house and you don't want to scale that business, then maybe you might be able to time the market. And I say maybe because think about it, this is probably going to be your primary residence. So there's so many factors here that have to come into play and have to align for you to be able to make that purchase at the bottom. Your rental lease needs to be expiring. You have to have the correct down payment, credit score, and many other things timed correctly in order to make that purchase. I mean, what happens if you just renewed your lease, for example, and now you no longer can commit to buying a house at the right time? That decision alone will cost you the opportunity to buy the house, maybe at the bottom. With the feds constantly adjusting interest rates and pumping more money in the markets, what we're seeing is the opposite effect right now. And real estate prices are actually going up with interest rates being low. So what you guys have to take into consideration is this is not a 2008. Yes, in 2008, real estate saw the largest decline it had ever seen historically. And a lot of people jumped into that market at that time and made a lot of money. But I think the Fed has gotten smarter since and have placed a lot of security measures in place for that not to happen again. And like I said, if interest rates continue to remain this low, I think the demand is always going to be there. So as of right now, I'm going to tell you what my strategy is and how I'm buying real estate moving forward. The way I buy real estate is I always look for value add deals. And what that means is I like to buy deals in neighborhoods that I can get below market value. Now often these deals may require a little bit of work. And in some cases, they may actually require a lot of work. But these are the deals that I like buying. And the reason for this is I can get these deals at a 20 to 40% discount in most cases. So I'm actually making money when I buy the deal. Now, by the time I'm done completing the rehab on these deals, what ends up happening is they're still below market, meaning there's a little bit of a margin to catch up to market price. So for example, if I bought a $150,000 deal that needed $10,000 worth of repairs in a $200,000 neighborhood, after closing costs, fees, commissions, I'm still sitting in that deal for $185,000 in a $200,000 neighborhood. What that means is I still have a $15,000 cushion in that neighborhood. And let's just say the market were to drop that year when I bought that deal. I would lease the deal, hold it for a couple of years, wait for it to appreciate, and then sell it then. And this has actually happened to me in the past where I've had to hold a deal a little longer than I anticipated because the market was going to a rough spot here in Houston, Texas. But I was able to get out of that deal 2 years later with way more money than I expected. Another challenge that I want to talk to you guys about is structuring debt. So if you guys remember the last financial crisis, it was very difficult for people to get loans to buy homes. And if you wait for the next recession and the market to go down, I guarantee you that it's going to be very difficult to buy that home with a loan. And the reason is that the banks get panicky and they don't know exactly where that debt is coming from. And if the banks aren't lending, guess what? Even if the market is at its lowest point, you will be unable to buy this real estate. So that's another thing that you guys should really think about. What I recommend, especially if you're looking to invest in real estate, is that you gather up a portfolio of homes or a portfolio of commercial real estate over time. This way, you have a running average for your entire portfolio. And ideally, you would want your portfolio to consist of a lot of value-add deals, meaning you picked up those deals below market value. So regardless of if the crash is coming or not, you've guaranteed yourself income-producing real estate and you've avoided FOMO, fear of missing out. In fact, when the market does go down, you will know that this is an opportunity for you to buy more real estate. And because you have existing investment properties, it'll make it much more easier for you to qualify for a loan. And with that, I hope you guys found some value in this video. If you guys are enjoying my content, consider subscribing to the channel, hit the like button, and I will see you guys next video.